Hello and welcome to Lone Investor. So in today's video, I'm going to do an update on the S&P 500. The last update on the S&P was about a month ago, and about 2 weeks ago, I did one on the Nasdaq. So on my last video on February 21st, I was saying some people were paying attention to the head and shoulder pattern and they are calling a lower market bottom. And I was saying if the Russia and Ukraine conflict escalate, it will most likely to have some sort of a false breakdown, and then it will have a quick recovery afterward. So looking at the current chart, this is the head and shoulder pattern that I had, and the Russia-Ukraine conflict begins on February 24th, so we did have a little breakdown, and then we had some kind of recovery up until now. So it was very close to what I had in my mind back then. So now let's look at some data and see where I think the market is heading in the future. So looking at the tactical, the S&P has broke out of the downtrend, and it's also shoot through the first resistance that I had, which is around 4,550 points, where you previously had some resistance and support. And at this stage, we're not even at the overbought level yet, and the next strong resistance that we have is around 4,700. So in the short term, it might fall back a little bit to test the first support, or it could go higher to reach the 4,700. And I think this time it will most likely to get rejected by it, and we will fall back to the support line. And there are some people calling this a bull trap before a deeper bear market, because there are news recently talking about the inverted yield curve and a possible recession scenario. And also there is a rise of inflation, and then the Fed will probably raise the height like 6-7 times in a year. So all of this data seems very worrisome to a lot of people. So that is why some people are calling this a bull trap to have a further market down. So let's talk a little bit on the yield curve first. So the inverted yield curve used to be a signal for recession, and out of the 28 times of the inverted yield curve, 22 of them comes a recession afterward. And currently the yield curve is sitting at 0.04, so it's very close to zero. So the gray area represents the recession, and so every time when it touches the zero line, a recession is following after. So you can see in all these cases which come true. But you may also notice that after the yield curve hits zero, there is sometimes before the recession comes, and it usually happens after the spike of the yield curve. So in here you have a similar idea. Every time when the percentage goes spike up, then it starts to have the recession. So currently we're really at a 10% level, which is considered quite low. So in a sense, currently we still have some time for a market rally before the recession comes. So that is one of the reasons why I don't think this is a bull trap. And another data that's beneficial to the stock market rally is the stock buybacks. As you can see in here, a lot of the companies are doing a stock buybacks, and a stock buybacks will usually help the company's stock value as there are less outstanding free flows of shares. So that will tend to bring the price up. And also in order to move the stock market, the money has to come from somewhere. And on one of my recent market video on Nasdaq on March 20th, where I said the next Ted 1 will be massive. And one of the reasons is the fund manager, they have been holding a high percentage of cash, where it jumped from 5.3% to 5.9% in March. So if all this money is to be put back to the stock market, it will for sure push the stock market up higher. And I have also put down some statistics on what usually happen afterwards. So if you're interested, you can watch this video. So besides the local US fund that might be putting the money back into the stock market, we can also see funds around the world is pouring in the US market also. As you can see, there is a decrease in the European market, which I think makes sense because of the Russia-Ukraine issue. They affect the European markets more than we do because they are highly depending on, let's say, the Russian oil. They can't really censor the Russian oil like they did in the US. And then war conflicts usually benefits the US dollars. And as I've explained in my Chinese stocks video, emerging market and US dollar has an inverted relationship. So if the US dollar performs well, then the emerging market will not perform as well. So you can see there's a slight movement coming down for the emerging market, and the funds haven't really moved out of the US market. So from now until recession really comes, I believe we will see another massive bull run. And in terms of the magnitude, if you're taking the statistic from the previous time, most of them go as high as 100% from the market bottom. So if we are taking this to be the bottom around 4,100 level, so that means the next bull run, the all-time high, will hit around 8,000. I know it sounds crazy, but this is what this statistic and data is telling me. But in the short term, as I have said, if you want to buy in some, I think you'll have a higher chance to hitting back the support line, either right away or either you'll get rejected by the resistance and then fall back to find support. And the most important catalyst is the FOMC meeting in May. And right now there are some talks between Russia and Ukraine, and if everything works out, then it might help ease the commodity prices a bit, which will lead to some easing of inflation percent. And maybe when the FOMC meetings happen in May, they might not sounding as hawkish, and that may trigger the bull run that I'm looking for. So from now between May, we might see some volatility and a retest of some support and resistance line in between these three levels. So these three ranges, 4,700, 4,500, and 4,300 are the three levels to watch for. If you can manage to catch the volatility in between all these lines, you might be able to get some nice profit also. So this is it for the market update, and I'll see you guys next time.